The next housing crisis may not start with home prices crashing. It could start behind the scenes with companies responsible for collecting mortgage payments and helping homeowners when they fall behind. These companies are called mortgage servicers. So every single month, your servicer collects your mortgage payment and sends the correct portions to the investor, the county for property taxes, and the insurance company. But here's the part that most people do not realize. When a homeowner stops making those payments, that mortgage servicer may still be required to send certain payments out. So the homeowner, they're no longer paying, but the servicer may still need to cover taxes, insurance, and payments owed to that investor. That becomes a huge problem when thousands or even potentially millions of homeowners fail, or fall behind at the same time. We saw this during the pandemic. Millions of homeowners entered what was called forbearance and were allowed to temporarily pause or reduce their mortgage payments. That helped prevent a massive wave of foreclosures. But the system did not work only because forbearance existed. It also worked because mortgage rates dropped dramatically. It was insane. Millions of people refinanced. Home purchases remained very strong at that time, and mortgage companies generated a massive amount of revenue. It was crazy. The refinance boom helped give these servicers, the cash they needed to continue helping struggling homeowners. Today, that situation is completely different. Millions of homeowners already have rates in the 2s, 3s, 4s. They have almost no reason to refinance into a mortgage rate that is much higher. Home sales also are slower because of those high prices, affordability, inflation, and homeowners, nobody wants to give up those lower rates. That means many mortgage companies have now spent years operating with much less revenue. Now imagine unemployment starts rising. More families begin missing on those mortgage payments. More homeowners need forbearance, loan modifications, and other, forms of assistance. Servicers could suddenly need a massive amount of cash at the exact same time they are bringing in much less money. Normally, a slowing economy could cause the Federal Reserve to lower interest rates, but if inflation is still elevated like it is right now, the Fed, they may not be able to lower the rates aggressively enough to create what's called another refinance boom, and that's a real concern. We could have homeowners needing help, less revenue inside the mortgage industry, and no major drop in rates to provide that relief. That does not mean another housing crash is guaranteed. It does not mean homeowners should panic, but it does mean, the next housing crisis may not be with bad loans or falling home prices. It could begin with cash flow problems inside the companies responsible for keeping the mortgage system running. And that is something policymakers should address, before the downturn begins, not after. If you want to learn about mortgages, sometimes I have funny videos, a lot of times I have educational videos. Drop